Hi, this is George Manousis from our Federal Tax Services Group here in Washington National Tax. And we just issued our fourth quarter 2016 FTS newsletter. This quarter we discussed 9 different technical topics. I want to talk about 4 specific topics that are included in the newsletter. The first one deals with a recently issued LB&I Audit Technique Guide dealing with repairs, the final tangible property regulations. The Audit Technique Guide is over 200 pages, provides insights and explanations for examining agents to use in helping to conduct an audit of repairs. The ATG, as it's referred to, did undergo IRS National Office review, so you can expect that the information that's requested in the ATG is something that exam agents will request as part of their routine audit, so taxpayers should be familiar with it, as well as PwC practitioners. Secondly, we discussed the impact of tax reform may have on accounting methods. This was a subject of an earlier video that I did with Brian Meehan. Again, we reiterate the importance of understanding your accounting methods and opportunities to accelerate deductions in these higher rate years and defer revenue into lower rate years. Third, we discuss about a new announcement by the IRS with respect to appeals. Specifically, they will not take cases at appeals dealing with IRS abuse of discretion arguments. So if they were to deny, say, a non-automatic 3115 or request for 9100 relief, appeals will not take that case. Your only remedies would appear to be to elevate it within the IRS National Office, perhaps to the Chief Counsel, or to go directly to court. This is a new emerging announcement by appeals, so it hasn't been tested yet, and we'll get some more insights as time goes by from our tax controversy folks. Finally, we discuss at the end of the newsletter a recent announcement or explanation issued by the Joint Committee on Taxation, giving some background behind a recently proposed technical corrections bill. Among the pertinent topics in the technical corrections bill would be some clarifications dealing with bonus depreciation, specifically the descending rates, and some favorable guidance that's issued in there, or at least if it were to be enacted, some favorable clarifications that the phase down in the rates is delayed 1 year for long production period property. The IRS is working on guidance to clarify that, but the technicals would help to provide certainty to taxpayers if they were enacted.